What's up, everyone? Welcome back to Your Nifty Guy. I hope all of you are doing well. Another trading day in the books, and honestly, days like these remind me why we focus so much on planning instead of guessing. The market gave us clean opportunities, and our process did exactly what it's supposed to do. In this video, I'll walk you through today's price action, the key trades we took, and the important takeaways for tomorrow. If this kind of structured, no nonsense trading content helps you, don't forget to hit the like button, subscribe to the channel if you haven't already, and share it with a fellow trader. Before we dive into the video, uh, I am getting extremely tied up because of the work pressure in the office, and because of which I am not sure if I would be able to post these daily videos. And that is the reason I have created a separate Telegram channel as well, one more medium to connect with you guys, wherein, in case if I am not able to make a video, I will be posting in the commentary like a voice note kind of a thing. So make sure to subscribe to it. The link is in the pinned comment. Let's dive straight into the analysis part. Uh, so Nifty today opened with a gap down right below our uh, trend line, which we saw this particular triangle consolidation we had marked, and our plan was to go short below it with a pullback. Now, the first 5 minutes of trading was a huge range, right? So if we have a look at the first 5 minutes of the day, it is almost 0.5% move came in the first 5 minutes, right? Immediately after opening, Nifty plunged, saw some recovery. So this was a volatile start. And like I have told you guys in certain past videos as well, whenever the first 5 minutes candle or the first 15 minutes, we can say, is a big range candle. So over 15 minutes, it will be the same thing only. Of course, the closing will be a little bit lower. So whenever the first 15 or the first 5 minutes candle is a big range candle, right? So a 100 plus candle on Nifty, close to 0.5% would always qualify as a big range candle. Most of the day is likely to be sideways. And if you can see post this particular move which came in, the day was extremely sideways with moves coming in, traps coming in on all the sides, right? Uh, but nonetheless, we had a plan to short the markets below this particular low, and that is what I did. So after this particular pullback which came in, I marked day low as my entry, and at the break of this candle at 10 a.m., this is where I entered into a short trade. Now, the reason why I always ask you guys to shift your trading to the next week's expiry when you're trading on expiry as well as expiry minus 1 day, and the reason why I in particular do this is uh, after the entry, Nifty went extremely sideways, right? There was no momentum on the short side. Plus, there was RSI divergences all along the path, right? But then, simply because I was in the next week's expiry, I managed to get out at cost. I exited my position with just 4 points somewhere around these levels when the markets were again coming back to the cost after giving me some profits. And this was simply possible because I was in the next week or the January month end Nifty option, right? Had I been in the options which are expiring tomorrow, the decay would have been super fast and I would have ended my day or ended the trade in a loss. But then just because I was in the following week's expiry, where in the decay or the time decay, right? The theta decay, which is the variable, is almost next to nothing right now. And that is the reason why I still managed to get out at cost. And this is the sole reason why I always ask you guys to shift your trading. Even if the market goes against you, not against you, but even a sideways market can go against you in case of a trade that you're taking very near to the expiry, and you simply are safeguarding yourself. So you pay a slightly higher premium, but you safeguard your capital. I hope the point is clear. You guys can go and have a look at the in the money charts of the put options of today's expiry and compare it, oh sorry, of tomorrow's expiry, and compare it with the same strike price in the money put option of the following expiry, and look at the difference in the price movement, and you will be able to look at what exactly am I hinting at. Now, post this particular move, market became extremely sideways, post which I decided to not take any trade or not even look at the markets. Like I said in the morning only, I had formed my opinion that okay, today the market can be sideways and breakouts and trending moves can there's a very less probability of it happening. And as you can see out here, after being sideways for some time, I wasn't even looking at the markets out here. Otherwise, maybe I could have taken a long trade at the break of this high. So this would have been a good trigger to go long, and it would have yielded very good results with a stop loss as small as just below, right below this particular swing. So this would have been a good long trade, but I was not actively looking at the markets. But then again, post this particular move, also markets kind of trapped some people out here, uh, or by creating this bearish candle out here again, formed a base, went up again, trapped people who would have longed the markets at the breakout or again at the breakout of this structure, creating a short. So in short, market is trapping left, right, and center right now. So that is the reason why for the last couple of in the last couple of videos, all I have been saying you guys is to keep your trading capital safe by reducing your trading activities for now. The market is also a bit confused. Maybe the market is waiting for a trigger, right? Maybe the US uh, or some statement from Mr. Donald Trump, maybe a war like scenario, whatever it is. I believe the market might be waiting for a trigger, and the market did again. We came down below a good consolidation after a good sideways consolidation zone, but then apart from the momentum which came in the morning, nothing else was there in the day throughout, right? So now, before again we plan the day for tomorrow, sincere request, please shift your trading to the following week's trading options. Do not trade in the options which are expiring tomorrow. Apart from the expiry special trade that we can take post 2 p.m. based on the OI and change in OI, no trades to be taken in the options which are expiring tomorrow. So yeah, again, the candle is obviously quite negative, but then again, we were looking at this triangle consolidation in a shorter time frame, but it can again be a sideways move in a broader range, maybe this high and this low, and market might be trapped in around this particular uh, rectangle area for some time, trapping both people who are long and people who are short. Whatever it is, we'll have a look and in the live markets, and we will have our plan ready on an early time frame. What we can see is this will be based on where our the basis of our trading plan. So this is the move which came in, this is the pullback which came in, and now if the structure has to continue, either Nifty continues to drift downwards and we get a trade on the short side, or if we after this down move. So this is the reversal setup that I have, a good pullback, another move or push on the downside, followed by a move on the on the upside. This is the trigger. This will be a trigger to go long in the markets, of course, with good double bottoms, right? So immediately in the first move that comes in, the first pullback which comes in, we do not create any long entries. We wait for the markets to give us clear structure. So yes, this high is of importance to us. I believe this is the same high, of course, in another. And so this will be the cue to go long. This will be the cue to go short. In case if you do not want to go aggressively long at the break of this high, this is very close to today's high as well, and we can wait for markets to take out today's high and then continue the trade, or else a trade on the short side can also be taken if we are breaking down back below today's closing. But then I will prefer uh, to take a short trade only below today's low. So yeah, I will keep my trading plan very, very simple. No complex entries for now. And of course, with limited quantities. So that's it for today's breakdown, traders. Remember, it's not about catching every move. It's about following a process that works consistently over time. If you found value in today's analysis, make sure to hit the like button, subscribe to the channel, and drop a comment with your key takeaway from today's session. Your feedback really helps the channel grow. I'll be back with tomorrow's plan, so stay disciplined, manage your risk, and as always, success in trading isn't about being right, it's about being consistent. See you in the next one. Cheers, and thanks for tuning in.